Chris, if I start with you, navigating choppy waters, we all agree on that, it's choppy. What are your thoughts?
Yeah, so, you know, the sort of headline from us in a way is that tariffs gets the news, but it's uncertainty that does the damage. And we need to think about that sort of wider environment. The way we're sort of breaking it down from the International Chamber of Commerce is really into three kind of core buckets. One is the priority to de-escalate, particularly the trade conflict between China and US, keeping in mind that the US is only 13% of global trade, albeit the UK, as was just illustrated there, is overexposed to the US. But the big opportunities are not in the US. And we're seeing some of that de-risking in supply chains, with 35% of global buyers and sellers, shifting supply chains outside of the US, 50% of commodity players doing exactly the same, and more likely to do the same. And then we're also seeing it in the government space, you know, whether it's the UK-US deal, de-escalating, big announcement was hidden in the small print, which is digital trade agreement. That's got big opportunities for finance, investment, and growth. And then US-China, we've seen most recently doing some sort of deal on minerals versus chips, it looks like.
Which we don't know much about.
Which we don't know much about. And then the second bucket is stabilization. And that's a massive priority. That 87%, we've seen swift movement from governments and trade blocs moving in very quickly with strong statements, agreements, dialogues we've never seen, China, Japan, South Korea, big statements from APAC and ASEAN. And then obviously you've got the deals with the UK, India. We'll come back to the UK role, and we're likely to see exactly the same from the Commonwealth trade ministers next week. And that all sums up to about 70+% of global trade. So that's good news, and that should give us some confidence. The UN has also set out a big statement in the last couple of days, particularly on the digitalization side. And then the third bucket, which we'll see more later on, is around revitalizing the global trading system. We know there are issues, and the US is quite right to point out some of those issues, albeit they are taking hard positions. So we've got the ministerial conference in March next year. We've got 3 Commonwealth countries as playing an interesting role. I think we've got Vashti speaking later on. We've got B20, South Africa, you've got Commonwealth in Namibia next week, and then we're all in Cameroon in March. So the Commonwealth is playing an interesting role, as are the other mid-economies, and the UK fits in that category. So it's quite conscious, I would say, the role the UK is playing, Japan is playing, Australia is playing, India is in there as well, and then other Commonwealths stepping in, stabilizing, de-escalating, making sure that the trade system is flowing.
So what you're saying then is the consequence of Trump and tariffs and Liberation Day and all that mayhem that was caused in the short term is causing other aspects of trade around the world to really go for it, to really come together, collaborate, and see other avenues.
Yeah, we're seeing a fundamental shift in the world order. I mean, there's been a shift in the world order for some time. What we're seeing is a massive acceleration of that. And I wouldn't look at the US as a short-term thing. This is quite a fundamental shift in policy over the longer term, turning much more sort of inward, if you like. And in the meantime, there's no such thing as a vacuum. The US can't just walk back. That space is already being taken by everyone else. And so what you're seeing from the rest of the world is the space to watch, because I think that's really interesting, especially from Asia, really playing an active role.
William, your thoughts?
Well, Sally, I think you summed it up at the start when you said 2025 has already been quite a year. And in terms of global trade, it's reminded us that 2 things really count. Tariffs matter and have a massive impact on order books, profitability, and jobs. And secondly, trade deals matter. Whether it's in the form of a full free trade agreement, that's been the model that policymakers have wanted to follow here and in Europe in recent decades, or more sectoral deals in order to give companies tariff relief. So we've had real visible proof about the importance of this. I think what I would say is there are reasons to be optimistic. If you look back just last autumn in terms of some of the forecasts from the World Trade Organization, we're seeing services trade growth rising at 8–9% year on year. And the global trend, as you know, Chris and I see when we go to Geneva, is Africa keen to get involved in a burgeoning services economy. And so that trade mostly is not going to be impacted by tariffs. We also look at, for example, computer exports, computer services exports from Europe. If we take the UK as part of the European continent, 15% year-on-year growth. So again, there's some real positives out there, but tariffs hit the bottom line. And that's why we need to implement this deal with the United States as quickly as possible. Remember, for firms, nothing's changed. They're still, their customers are still paying the same tariffs they were a month ago. And we also need to make sure that all good sectors can experience tariff relief and no one is left behind.
Yeah, I mean, you were saying the services sector so far has kind of managed to escape tariffs, but as Anna highlighted, you know, in the film sector, and which is a huge part of our economy, that's on Trump's radar. So I think we can't ever rest on our laurels and think, oh, you know, maybe services will be given a wide berth. Anna, if we bring you in at this point, so we've had trade data out today from the Office for National Statistics, just for the month of April, which was a weird month for so many reasons, but a massive drop, wasn't it, in trade? So give us your take on the choppy waters we're in and some of the challenges.
I think how the US situation or the UK-EU deal affect businesses is dependent on the sectors. And so what we're going to be seeing is certain sectors are going to be feeling the pain a lot. And they'll be thinking, how can I protect myself from the instability of what is currently happening with the US? So you would have businesses potentially trying to stockpile ahead of any tariffs coming into place. There are strategies that businesses can employ in sending their goods early enough so that they can arrive in a country, but they're then placed on the customs hold. So the tariff doesn't actually apply at that point, and it only applies at the rate at which you remove those goods from the hold. Now, of course, that can backfire slightly as well, because if you have the goods in place and you're hoping that the tariff goes down, for instance, when we had the UK and the US agreement that the aluminium and steel tariff will go down to zero, some businesses may have been waiting, well, I'm going to hold out in getting that out because I'm going to wait until it goes to zero. What we have seen is actually it hasn't gone down to zero. Yes, the rest of the world is paying 50%, but the UK is still paying 25%. So while we do have deals, and there's many kind of deals in the pipeline, ultimately it's going to come to the detail of when those deals are being implemented.
And that's what's skewing the figures at the moment, isn't it? And it's really tricky because, I mean, we look at the numbers each month, and obviously 1 month is just 1 month, and we always have to keep that in mind. It's not quarterly, it's not annual. But you were saying earlier, William, about the April numbers, if you just want to share that, because many people may not have seen them in the room today.
Yes, indeed, Sally. So these figures were released at 7 a.m. this morning, and be very cautious always about 1 month's data. And we know that there were a lot of activity going on in the couple of months before April. But in terms of goods exports to the US, there's been a 32.7% drop in the month of April alone. And if you look at goods exports to the US in April this year and compare them with April last year, there's a 14.6% drop. So these are worrying. This does show what we were saying from the outset, that if you pile on extra costs, either to the exporters, depending on the Incoterms in which they trade, or indeed to their customers and supply chains in the US, you're going to have a whole lot less trade. And that's what we're seeing. And that's why we need these deals, not just with the UK, but we also need tariff relief amongst our partners so that the global economy as well can stabilize and begin to invest and grow again.
Practically, Anna, what does the deal with the EU mean for future exports, future trade with Europe, which is our biggest trading partner by quite some margin? Looking at it, what the deal is, what does it mean? Is it very positive? As Anna was saying, it's not as good as how things used to be, but how far forward are we?
We're not going back to pre-Brexit. That is definitely not happening. We're probably not even going back to the border target operating model, with the final implementation of it was happening in April. What we have is a common understanding to join a sanitary and phytosanitary zone. So for those of you in the food and drink sector, agricultural, there is probably going to be some reprieve because we currently have quite a lot of both, not necessarily tariff barriers, because tariff barriers can be removed through the TCA that we currently have in place, is the non-tariff barriers, the expectation for requirement for health certificates, for the veterinary inspections. That adds quite a lot of both admin burden and a cost burden. And that means that the goods that are traded between the UK and the EU, and it's an issue on both sides, there's quite a lot of disruptions to that. So the hope is that the UK and EU deal for that sector will bring an element of reprieve. If you're trading nuts and bolts, nothing is changing for you.
And Chris, we are hoping for the trade strategy. We're promised it will come in the week, the 23rd of June, so quite soon. What do you want in that trade strategy?
Yeah, we've been arguing, well, there'll be a general shift away, thank goodness, from FTA. So that what the government are trying to do now is close down. The GCC will be the next one coming, is close down the final trade negotiations. There is space for renegotiation, by the way, with the likes of Canada and Australia, which weren't particularly ambitious, but should be now. But what we've been arguing for ages is we've got to focus on that bigger trade environment. That's the digitalization, modernization, a proper interoperable digital economy, unlocking that 22 billion of working capital for SMEs. You know, that's way bigger than all the deals put together. So just to put that in context, and I think we'll see a lot more of that in the strategy. But we have to manage expectations. It won't be everything that we want, but I think they've definitely taken on board a lot of our general points, and a lot of people in this room have been part of that conversation, which is good news.
Did you want to say something, William?
Yeah, I think also, you know, there's a common agenda between ICC and BCC on trade digitalization as well. So, you know, we hope that the trade strategy will make that a priority for government and roll that out with all the benefits for global trade growth that can be from that. We also need to perhaps look a little smarter at the kind of deals that we do. You know, I think less there will be, I think, of full free trade agreements, more mini deals. So we should be looking to get a digital trade deal with the US, supply chain agreements, you know, with some of our CPTPP partners. That, I think, is where post the trade strategy, trade policy will develop and evolve.
From your perspective, Anna, what needs to be in it, the trade strategy?
There needs to be support for businesses that are wanting to export but do not. Majority, as Anna mentioned earlier, loads of businesses in the UK do not export. Majority of businesses that do export, they're SMEs. And as an SME, you are being hit from a lot of different directions, both in terms of domestically, in terms of rising cost of employment, inflation, but you also need to have the ability to export out to a wider world, to other markets. So I think both the trade and industrial strategy should be able to support businesses in ability to do that and give them the skills that they need. I think it was great to hear yesterday in the spending review, the investment in development of skills and apprenticeships. I think that is probably something that can be underestimated, because trading internationally does require an element of skill. There is a lot of rules that international trading only works when the rules are followed. When they're not followed, then you think you may be getting a good deal, but then you may end up with a bit of a surprise. Yeah. And that's sometimes the message that it needs to land.
Okay, who's got questions? You can do it the old-fashioned way and raise your hand, and we've got microphones that will come to you, or a comment or a thought. Would anybody like to get involved at this point before we wrap up this panel? Anyone in the room? You're all very quiet so far. Okay, no more questions. All right, so as we wrap up this panel, we've got some here. Oh, here we go. All right. So we've seen a thawing softening of UK-China relations recently. How realistic is renewed enthusiasm over greater trade relations as a result? All of you can respond to that. I mean, Chris, there is a lot of conversation about the UK-China relationship, good and bad. And the politics is always unbelievably difficult. But the trade relationship is so important, isn't it?
Yeah, I always think we're quite peculiar in the sense that we look at this so binary terms. You know, we're a mid-economy, just like Singapore and others are. We have to trade with everybody. We're talking about two of the biggest economies. The US is, you know, pretty tricky. Yeah. The EU is thawing, and that's a good thing. But China's huge. Yeah. We have to have a positive relationship with China, and there are lots of things we can do together.
And the British Steel manoeuvre, I mean, that highlighted, didn't it? That was a huge Chinese investment into British Steel, which was then looking like it looked like, we don't know, that there was interference, there was a sort of a strategy on the part of China to scupper things.
Yeah, and you can't
And you can't forget that sort of situation, can you?
Absolutely, and you know, the whole of Asia is important, but you can't really trade effectively in Asia without trading effectively with China, because it's the big boy on the block, isn't it? It's like trying to trade into Latin America and missing Brazil. You know, so we have to just have.
Anyone else want to
good
respond to that? It's a
relationship.
really interesting point on China.
Yeah, I mean, it's our third largest export market for trade in goods. If you include Hong Kong, 7% of our goods exports from the UK go to China and Hong Kong. Huge investor here in the UK, and big investment opportunities for UK companies in China as well, particularly in that Greater Bay Area. So we need pragmatic decisions. Of course, China's got to comply with its responsibilities and obligations on security, and we must hold them to account for those. But there is a big economic opportunity, and we mustn't have doctrinaire decisions leading government. We've got to be pro-business and pro-growth,
Yeah.
and that means pragmatic decisions to keep that China investment flowing.
Anna, get your thoughts on the next question on the list about the US. Would we ever see an actual US plus one strategy emerging? I mean, the deal with the US that was brokered, that's not actually been implemented on practical level yet at all, was just an exemption from tariffs or future tariffs. It's not really a trade deal, is it?
No, but if you look at what the US is doing, they're not looking for true trade deals in how we understand them that are encompassing a wider economy. They are picking and choosing where they want to be the top player, and they're picking and choosing where they're willing to give you access. So I think we, as William said, I think we're looking at a lot of side deals in a particular topic, especially where there is a kind of common benefit. I don't know whether we're yet in a position to see a true FTA in a way that we understand it, because again, FTAs are governed by a set of rules that the US currently seems to be completely ignoring.
Let's just quickly, we're almost out of time, but one more. What is your advice for companies looking to export but are put off by geopolitical uncertainty? It is an unbelievably tricky time, has been really since Brexit, and yet, I must admit, banging my microphone, I must admit I'm really impressed by company bosses in this country, their resilience, their determination, and their sort of, you know, staying power, because we've had Brexit, we've had a global pandemic, we've had tumultuous political turmoil in this country. Now we've got Trump 2.0. I mean, it really has been years and years of incredibly difficult times, hasn't it?
Yeah, absolutely. I mean, I think but there's also a lot of scope to be more agile. So I think, you know, I think the big message from us to the buyers and sellers, which are the really important group here, is we have to get more demanding with government on what we need in terms of reform, especially on finance. There's a lot of bureaucracy that can be swept away with. There's a whole swathe of the world that doesn't have geopolitical issues. It depends on what perspective you look at. I'm in Africa next week. They're not talking about this at all.
Yeah.
It's just all opportunity, opportunity, opportunity. But we're not focusing enough on Africa. Latin America, hardly anybody's talking about that. That's full of opportunities as well. Middle East is obviously booming as well. So, you know, there's lots of places that are outside. And don't forget that 87% of the world doesn't want tariffs or trade wars. We just want to trade. So let's really optimize
So what you're saying is, look elsewhere, look at where the opportunity is, and then assess how you make the most of that, really.
Well, it's just practical, isn't it? We're just going to need to do, like the 35% and 50% I mentioned earlier on. It's just being pragmatic. Governments are doing it. Businesses are doing it. De-risking. But there are lots of opportunities out there, and we just need to be very and much more demanding with the government, where, like I say, where we need reform, where we need to see the trade system improve, because there's a lot of momentum around that.
Just quickly, both of you on that point before we move on.
So of British Chambers of Commerce members, 42% are exporters, so that's way above the economy average as a whole. And the stories that they can tell you, I think, speak to the point that they make you more profitable exporting. They're good for investment, good for employment, and good for wage growth as well. So firms which export have a more sustainable growth portfolio than those which don't. So we would encourage firms to do it. That's why the trade strategy should work with chambers and others to make sure that as many firms can get those advantages from exports and look to the new opportunities as Chris talked about. You know, the Indo-Pacific region now and certainly in the coming decades will drive huge amount of export growth. And we need to be leaning into that region as much as we do to the US and to the European neighbourhood.
Anna, your advice?
Well, we are the Chartered Institute of Export and International Trade. Our core mission is to encourage businesses to trade internationally, both importing and exporting. My advice would be try, pick a market and just try, because once you've done it once, if you're not currently exporting, this may be quite daunting. You're hearing all about the tariff shifts, the shifting landscape. You would have seen the changes happening post-Brexit, but just give it a try. And once you find the market, you will find that you can actually probably, once you figure it out once, you can then apply that strategy over and over and over again. And if you have a good product, there will be buyers out there that will want to buy it from you.
And just very briefly from all of you, the 90-day pause on reciprocal tariffs is set to expire, I believe July the 9th, unless that goalpost has moved and I'm unaware of it in the last 24 hours. How concerned are you about that? All three of you, please.
Well, I think you've got to be a brave person to predict anything in the next sort of 5 minutes, haven't you, really? I mean, it's... I wouldn't like to say, I mean, look, you know, the 90-day pause, I hope the tariffs will come down, but we've got these, you know, shadows over the top of us on film industry, pharmaceuticals. There's a lot of work to do. There's a good dialogue going on between the government and the US, which is positive. We need to just keep pushing hard. But you'd have to be a pretty bold betting person to say, right, this will happen on this date.
Yeah. Negotiations are ongoing, I assume.
Absolutely. Negotiations, not retaliation. That's what business here wants, and I think increasingly across the world. Huge risk to the global economy if we have a hard stop and a real knife edge on new tariffs on the 9th of July. I think the sense would be, because of the impacts we're seeing on the US economy and supply chains, there would probably be an extension. But we can see, I think, that the US is playing hardball. In a sense, we almost have a mini WTO round, because through its own unilateral actions, the US is bringing about big changes in tariff policy. Okay. So I think the hope is for an extension, and we'll see how many deals are done after that.
All right, Anna, very briefly, thank you.
I would agree. I don't even know what happens overnight, and I'm sure you struggle with that as well every morning.
I don't get much sleep at the moment.
Exactly. So 9th of July could come and go, and we might be in an entirely different position that we're currently speaking in. I think what we should be expecting is more sector-specific measures rather than a flatline tariff. I think that's potentially where we're heading towards.
Okay. Anna, William and Chris, thank you all very much.